We appreciate you joining us to find out more about, what REG and TCP is like on the new CPA exam, CPA Evolution. And basically, the rest of this evening is divided into four main parts. So first, I'm going to go over just to let you know what the pass rates have been on the on REG and TCP since the exam switched. The new exam changed, I guess I should say, to CPA Evolution in January of 2024. I'm also going to summarize for you the basic types of material that's tested on REG and TCP, just so you understand the difference, right? So you kind of got the big picture as you before you start diving in and actually start studying for REG, which would be the first one that you would do if TCP is also going to be your discipline exam. And then we're going to talk some about task-based simulations, because you've done a lot of multiple choice questions in your university classrooms when you were going through your degree programs. But TBSs, okay, those are a little different animal. And so some of you may have been exposed to that a little bit in your academic programs. Some of you may not have been exposed at all. By the way, UWorld has lots and lots of sample task-based simulations for you to practice with, but we're going to talk more about those strategies for taking those. And we're actually going to go through 2 TBSs, so you'll have a better understanding of what those are like. And then we're also going to be talking, Jared's going to come back a little bit about halfway through tonight and talk more about UWorld resources, okay, how UWorld, the types of tools and materials that are provided in their digital platform that will help you prepare for both of these exams and the other parts also you're taking on the CPA exam. All right, so that's where we're headed. So first, let's talk some about why the CPA exam, why the AICPA, I should say, felt it necessary to make this change to the CPA Evolution framework that we have now. And it kind of goes hand in hand a little bit with something else that's been happening in the profession, which, and this has been happening in most states. So depending on where you're living, probably has already happened in your state or is happening in 2026. I know I live in Alabama, and this is taking effect in 2026 in Alabama. But you can now actually take the CPA exam and get your CPA certificate with just 120 hours of education. And so that's a new pathway that, once again, that's determined at the state level. So not all states, but most states have passed that. And now you still can go the route that's been what most students have been doing for the last, probably 25 years or so, which is to get 150 hours of education, which often included a master's degree, which could be a master's of accounting or MBA or some other type of degree. Now, note that if you are, if you're going the 120-hour route to actually get certified, you got to have 2 years of experience before you'll get that certificate. With the 150-hour route, you only need 12 months of experience. But what's the difference in these rows? Now, once you get the CPA is the same, right? That credential, once you have it, it's the same on everybody's resume. But if you only have 120 hours of education, then your entry-level rows might be more like entry-level technical rows. Whereas with if you go and get a graduate degree as you're preparing for the CPA exam, then you might actually be able, then you'll be prepared if you want to maybe try to go into some specialized advisory tracks. And I think the graduate programs or the extra coursework you would take to get to 150 hours would also help you prepare for the discipline exam, bar, ISC, or TCP, depending on which one of those you're taking. Okay, so now for the pass rates. Now, this has really been surprising. There's a big lead up to CPA Evolution launching January 1st, 2024. In the profession and our academic conferences and just in our academic programs across the country, it was interesting. Everybody seemed to be in agreement that probably what was actually going to happen is when you got, and of course everybody has to pass odd, far, and reg, so everybody takes those. But then in terms of the disciplines, would it be, would students tend to favor bar, ISC, or TCP? And no one felt like it would be ISC or TCP. Everybody said most students are going to take bar, right? Because that's kind of continuing more the advanced financial accounting information and some other topics related to that. And there wouldn't be that much interest. The rest of the students, maybe 60% are going to take bar, and then maybe the other 40% are split evenly between ISC and TCP. Now, what we're looking at right here are pass rates. All right, and so not the percentage who's taking the exams, but pass rates. Now, notice REG had a very high pass rate, okay, in 2024, 2025, and we've got the data for the first quarter of 2026. So around the mid 60s. Whereas, look at auditing's mid 40s, mid to upper 40s, but FAR has been right there around 40%, which has been, so it's been more of a struggle for students to pass. But then when you pick your discipline exam and folks are looking at bar also being around 40%, and then ISC being more in the high 50s or all the way up to the mid 60s. But then look at those TCP pass rates. Okay, and I'm going to be showing what's on TCP a little bit later. And it's complex. It's complex material. So I mean, I've been teaching the tax law for 35 years or more, and I'll be honest, these pass rates really surprise me. But it really doesn't matter whether I'm surprised or not. Your goal is to pass the exam. And so the main message here is, look, don't be afraid of TCP. Right? I mean, it's fine to take bar or ISC depending on what area interests you. But if tax is something you think that you would like to maybe learn more about and perhaps do some more of that in your career, these pass rates are almost up to 80%. Now, maybe you may be thinking, well, maybe they're high because only a small number of people are taking TCP, right? Because most people go into audit, right? Audit or more financial accounting jobs. It's only a minority that go into tax. Well, this right here shows you that that's not what's happening either. Look at the number of candidates, okay? Now, this was just for the first quarter of 2026. So your TCP, for TCP, there was almost 4,500 students took TCP in the first quarter of 2026. Now, how does that compare to bar? Notice bar was barely over 1,000. So you've got 4.5 times more candidates taking TCP than taking bar, and you can see ISCs in the middle there. Okay, about twice as many are taking TCP than ISC. So why are students shying away from bar? It's not because they're not going to be doing financial accounting in their career. It's because of the pass rates. All right, and but we did want to make sure that you were aware of this, right? Because our goal in partnering with you is to help you get that certificate as quickly as you can. So let's now talk a little bit more about the blueprint. In other words, what is covered on REG? All right, so this is, once again, it's what everybody has to pass. It's mostly tax. You can see area 1, though, it gets into broader areas of ethics and professional responsibilities. That includes federal tax professionals' responsibilities, but also responsibilities for accounting and auditing in general, all right, is on REG. And then business law, you can see, is about 20% of REG. The rest of it is tax. So you got property transactions, individuals, and then taxation of business entities. Now, it's really useful to look at the skill levels that are being tested. If something's being tested at the analysis level, okay, that means that could be tested on task-based simulations. Remembering and understanding is really more memorization, okay, and then application kind of falls in the middle there in terms of your problem-solving skills needed to do well. And so notice with ethics and business law, those are not going to be tested on your TBSs, okay? That's more basic information. But the tax content is all eligible to be tested as a TBS. Now, this is not comprehensive in terms of all the topics that are on REG. Notice this says highlights of REG. And so a lot of REG is focused on the foundational principles of federal income taxation, what's income, what's deductions. And so I don't have those things listed here. Dependency rules, filing status, all of that stuff falls into REG. I listed here under individual the types of things that maybe are a little bit more complicated. And you were saying, I'm not sure, is that going to be on REG or TCP? I'm not going to read through that list for you. You can scan through that or take a picture of it with your phone if you want to, about those topics, to get a list of those topics. Now, there is also some business entity material tested on REG, but it's the more basic business entity material. So like for C corporations, it's more how do you compute C corporation taxable income and how do you do the book income, tax income reconciliation. With S corporations, it has to do with who's eligible to be an S corp, how do you elect to be an S corp, how does income flow from the S corporation to the shareholders. And then notice with distributions, it's only cash distribution rules, very basic distribution rules, very similar with partnerships, flow through of income, only cash distributions. And then there's a little bit of content that's tested related to state and local taxation, limited liability companies, and tax exempt organizations. Okay, so that's the material that UWorld is going to, that presents for you in their REG content. Now, what does that blueprint look like now for TCP? Well, first of all, notice this is really all tax. Notice all four of these areas have the analysis column checked, so these could all be tested in a tax-based simulation. And entity tax is interesting. Entity tax planning, they're not going to be asking you any memorization questions there. But now this is not just, sometimes folks think, well, TCP must just be business entities. No, they come back with more advanced individual topics as well as planning issues for individuals. All right. And then there's also entity tax compliance, entity tax planning. And then most of the property transaction content is actually in area 4 on TCP. REG only has some of the most basic information about property transactions. This is your highlights of TCP. Once again, you might want to take a snapshot of that or take a look at the file, the deck in the future. But this is a listing of, you can see more advanced topics. And then over there on that right-hand column, we get into more advanced issues with business entities. Do note at the bottom of the left-hand column, they do test personal financial planning now on TCP, which gets not just into like retirement plans and saving for education, but it also gets into investment portfolios, investment planning, and also insurance planning. All right, so the next issue is how can you be successful on the exam? And I'm going to turn that over to Suzanne.
All right. Thank you very much, Greg. So hopefully we're all excited about taking the CPA exam. It's a great accomplishment when you finish it. Trust me, that there's a really great feeling of sense of accomplishment for all of your hard work, and we're here to assist you. So we don't want you to stress out over it. I think that UWorld's got this fantastic plan that's laid out for you. And if you're following that plan, that you're going to be successful. So how can you be successful? Let's go over some of those details together. You know, scheduling your exam. So of course, we don't want to wait till the last minute. It's like anything in life, right? When you wait till the last minute, you get more stressed, right? Your anxiety level rises, and that's usually not a good thing. You know, butterflies is okay, but why stress yourself out over just waiting to the last minute to schedule your exam? So take a look at your calendar. Find out what's going on with the family. When do you think that you're going to be able to dedicate yourself to your studying? Because it's best that you try to get that date that you want in your calendar and you're down, so that you know that you're going to be able to, schedule it accordingly with your study plan. Now, if you work in public accounting, schedule the exam 6 to 8 weeks after busy season ends. One, you're exhausted, all right? You're tired, and you need some time. You need some time to relax before you now jump into a study plan that is also going to drain your brain. So make sure that you give yourself enough time to study before you actually schedule the date that you're going to take the exam. In other areas, if you work not just in public accounting, but in other areas, you might have quarterly ends, or you could be a student right now and you know that you're taking a really tough course that is going to really challenge you, and you're trying to schedule your time appropriately so that you aren't just trying to cram at the last minute. So create a study plan that's realistic. So I just mentioned, we don't encourage cramming. Cramming is usually a situation where you have left something, maybe one particular topic to the last minute, but we really don't want to be in that situation. Again, it raises your blood pressure. You start to feel anxiety, and you're probably not retaining everything that you hope that you would retain. So, make sure that you give yourself at least 6 weeks of lead time, of study time, to make sure that you can absorb the material. So I always, stick to a consistent plan. I would look at your week. Now, you could have certain weeks that are just busier than others. And so you should understand that and kind of, give yourself a little bit of break for those scheduled things, but don't try to cram it all on the weekend. All right. If you can take 2 hours a day, 2 hours in the evening or 2 hours during the day where you're studying and you're intentional about it and you're putting away that phone that is such a distractor for all of us, you're going to be able to concentrate better. And then, of course, you're going to be able to retain that. So again, schedule in some breaks and make sure that you're sleeping well at night. So if you have, a system where you are an early riser, maybe it's you get up first thing in the morning. That's me. I'm an early riser. I get up probably by 4:30, 5 o'clock every day. And I get a lot accomplished when it's those quiet hours in the morning. You might be that night owl. So do what works best for you, but make sure that you're taking chunks of time to study and not cramming that all in. All right, next slide. All right, focusing on weaknesses. We're all pleased with ourselves when we see that we have a passing score, and that's great. And so we might be like, well, maybe I just need a confidence booster and I'm going to study again material that I know. And that's good for your confidence, but make sure that you're also focusing on those weakness areas. UWorld does a great job of showing you what those weaknesses are, and make sure that you go back and you review through the material. It could be in a particular module that you actually have done really well in that module. It's just one area that you are struggling with. And so you'll go back and you'll fix that, because you're going to identify where you went wrong. You're going to go back into that UWorld material, watch the videos, look through the flashcards, do the practice problems that you have on that area to make sure that you're strong. That last item, practice, 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 is like anything in life, right? Some of us are quick learners. I've never considered myself to be a quick learner. I've always had to study and make sure that I, took the time to really go through and practice all the materials. When I was told to do the homework, I did the homework, and I did it multiple times to make sure that I understood it. Make sure that you're taking advantage of all that UWorld has to offer. If there's anything, you're not going to find a shortage of material to go through with the UWorld product. That platform is designed to help you succeed. Make sure that you're actually doing the task-based simulations yourself. So Greg had mentioned that we're going to go through a couple of TBSs. I'm going to do one for REG. He's going to do one for TCP. And we want to make sure that when, you're not just listening to us, because like anything, boy, that seems easy when somebody else is doing it, until the moment that you have to do it. And then it becomes a lot more difficult. So just watching videos, it's good. Yes, definitely watch those videos, but make sure to get the desired result that you want, that you're putting in that time. Practice, 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 and you will get there. Trust me. All right, so this next section, we're going to be focusing on a summary of the changes to the exam. So when you've been hearing about, I may call it HR1, Greg may call it, what do you call it, Greg? OB3, all right? The One Big Beautiful Bill Act, all right? So when we're making reference to that, hopefully you've been involved and been following some of those tax law changes that were passed last July. Now, as mentioned in this webinar, that's going to roll out. That's going to roll out on July 1st, all right? But we're just going to do a brief summary of the changes to the exam. I'm going to be focusing on those REG changes, and then Greg is going to take a look at those TCP changes. So this is not meant to be some exhaustive review. So if you're thinking, well, wait a minute, she didn't cover this, or he didn't talk about this exception to the rule, that's not what this is designed for. this is just to kind of refresh your memory on what some of those changes are on the exam. So qualified small business stock exclusion. So we have a very favorable code section 1202, in which if you have qualified small business stock, that there was if you had held it for 5 years and then you sold it after 5 years, that you would have a 100% exclusion. So that's been around. But what changed with HR1 is that now it's a tiered exclusion. So yes, if you hang on to it for 5 years, you're still going to get that 100% exclusion. But as you can see on the slide, you hang on to it for 3 years and then you sell it, it's a 50% exclusion, 75% after 4 years, and then 100% after 5 years. So that's definitely something that you should be aware of, that change, and pay attention to the dates, because you're looking at when that stock was acquired, all right, as the starting point for your holding period, and then start counting your years to see this tiered exclusion on how that might work. Enhanced senior deduction. So we're going to be talking about 4 of these new deductions that HR1 came up with. All right. And they're all going to get reported on a new form called Schedule 1A. And so the first one I'm going to talk about is this enhanced deduction for seniors. Now, please don't confuse this with the additional standard deduction for seniors. So if you're 65 or older, you get this additional standard deduction. So you are trying to figure out, do I have to file a tax return? What would my standard deduct? There's that, and then there's this. So this is what's called a below the line deduction, all right, on Schedule 1A. So when you arrive at adjusted gross income, all right, then you have the grader of standard deduction, itemized deductions, and then we have Schedule 1A deductions. So qualified taxpayers can deduct $6,000 or $12,000 if both you and your spouse are 65 or older. Next. All right, tip income deduction. So you can deduct up to $25,000 in qualified tip income annually. This is reported on Schedule 1A. In order to take the tip deduction, those tips needed to be reported to your employer and included in your income. So you're reporting tip income in your gross income, but then down below on Schedule 1A, you're allowed to take up to $25,000 of a tip deduction. So that's great for our people who earn tips. Overtime pay deduction. You can deduct up to $12,500 or $25,000 if you're married filing joint in qualified overtime compensation. Now, again, so in 2025, the employers were cut some slack. So imagine you're an employer and you're like, oh my gosh, I got to come up with how to report and show this to my employees, what their tip income is and what their overtime pay is. So they kind of let the employers use whatever format would help the employees figure out these $2 amounts. Now in 2026, it's going to be a little bit more obvious. All right, the employers are required to actually report that on the W-2, certainly in a supplemental statement or in your pay stub. All right, but that deduction, that for overtime pay, you can deduct up to $12,500 per year. Again, $25,000 if you're married filing joint. All right, auto loan interest deduction. So the rule has been for a long time that interest, personal interest expense is not deductible. All right, that's been the rule for a really long time. We're very limited on the types of interest expense that you are able to take as a deduction. But HR1 introduced this new, it's up to $10,000 per year in auto loan interest on a personal use vehicle. Now, there are some requirements that need to be met regarding that car being manufactured in the United States. You can actually have more than one car as long as it qualifies, because it's $10,000 per year in auto loan interest. Because if you think about that's a lot of interest expense that you're paying. So it could be multiple automobiles that if they qualify, that you would be able to take this total up to $10,000 deduction. It's also reported on Schedule 1A. Now, for all 4 of these that I talked about, there are phase outs. So just kind of keep that in the back of your mind. We don't have time tonight to go through phase outs, but make sure that you are familiar with what those phase out ranges are. All right, next, Greg. All right, state and local SALT. one of our favorite topics. Back with the Tax Cuts and Jobs Act, that was a biggie. I live in Illinois, and in particular, I live in King County, and the real estate taxes are quite high. And so a lot of us were paying way in excess of $10,000 for our property taxes. And so when you look at state and local, you're looking at state and local income tax and property taxes. When you add that up, yeah, a lot of people were in excess of 10,000. So it was limited to 10,000. HR1, all right, OB3 said we're going to increase that 10,000 to 40,000 in 2025. Now that's 40,400 in 2026. Now that's going to increase for inflation. All right. Increasing 2027, 28 and 29. All right. So pay attention to that, because to me, that's probably a really good multiple choice question in which they're going to try to see if you remember what the law was with the Tax Cuts and Jobs Act, but then now starting, that we have a much larger SALT deduction that we can take on our tax return. So, which is good. All right, overall itemized deduction limitation for our higher level income taxpayers. So you're going to do a Schedule A, just like you always would, right? Go through all the rules of all the different Schedule A deductions that you could have. You're going to come to a total, right? And if you, as a taxpayer, are in the 37% tax bracket, that marginal tax bracket, right? If you just think about your tax rate schedules, you're in the 37th. Well, you're going to have to reduce, all right, your overall itemized deductions by 2/37. All right. So really you're looking at 35% that ends up working when you start doing the math. If you're not familiar with this calculation, I also kind of see this one as possibly being a multiple choice question, just to make sure that you know this rule. So make sure that you go through the math and do some of the problems on this as well. Next. All right, QBI. All right. Now, most of you are probably familiar with the QBI deduction because you either got it in your coursework when you were a student, or you've already been working with it as a tax practitioner. And so you are aware of the rules regarding the qualified business income deduction under Section 199A. So I'm just going to talk about some of the things that change. So you have this income that's being earned either through a Schedule C sole proprietor, you got income flowing through from a partnership or from an S corporation, and you have this QBI eligibility. Now, the two things that HR1 did, one was they introduced this minimum QBI deduction of $400 for taxpayers with at least $1,000 of QBI from a qualified activity. Okay, now this is effective for, again, after December 31st of 2025. So that's good. So at least everybody out there with more than 1,000 is going to get this minimum QBI deduction of $400. But the big one that you really do need to pay attention to is the second sub bullet, right? So new expanded phase-in ranges. If that calculation wasn't already difficult enough, they've changed it with your denominator. All right. So these phase-in ranges, when you're looking at wages that have been paid unadjusted basis of when you're looking at that calculation, that phase-in range for single taxpayers changed from 50,000 to 75,000. If you're married filing joint, it's increasing from 100,000 to 150,000. So that ends up being a big change when you're going through the math on that calculation. All right, 529. We like 529 plans, right? It's a savings plan for potentially that the person you set it up for will use it for qualified higher education. Okay, so there's rules that go with that Section 529 plan. What I wanted to focus on again was some of the changes with HR1. So up to $10,000, that's a lifetime maximum, can be withdrawn from a 529 plan. To pay off student loan principal amounts if the related interest that goes with that loan for the beneficiary or the beneficiary siblings. But the good news is that that dollar amount is raising to $20,000 per student in 2026. So this is great because it's giving you, most of us think of, taking money from a 529 plan and paying for qualified educational expenses. But they're allowing you to, it does have a cap, but to pay student loan payments along with any related interest expense with that. Okay. Also, the second thing with 529 of what you can use the distribution from a 529 plan on, funds can now cover test fees. So you got ACT, you got the CPA exam, right? You got your CPA exam fees, software, any other types of credentialing expenses that you might have. Yeah. So that's great, all right, because it expands the list of qualified expenses. And so now you're going to be able to take a distribution out of that 529 plan to cover things like that. So it applies to distributions after July 4th of 2025. All right. Child and dependent care credit. So this is our taxpayer friendly credit that says that to be gainfully employed, all right, we know that it's very expensive for you to pay for your the care for your children. All right, so 13 and under, or if you have anyone who is mentally or physically incapable of caring for themselves. So what happened here with this credit, when you're going through the calculation, they've actually made it a little bit more difficult here, guys. So it went from 20% to 35%. So you always got a minimum, all right, of 20% with a maximum of 35. Now they've raised 35 to 50. So that's the good part of it, is that it goes from 20% to 50%. All right, that's fantastic. When you get into the material, that calculation now is just a little bit more difficult than it used to be. Adoption credit. So adoption credit has been around for a while, but it was a non-refundable type of credit. And we love credits. Credits are dollar for dollar reduction of our liability. So we want those. What HR1 did is that they are now allowing a $5,000 credit to be refundable beginning in tax years 2025. And so, yeah, we like refundable credits, right? That means we can get them back on our tax return. We don't have to have it, be, to fully utilize that type of credit. And then the child tax credit. So they bumped that up. I mean, back in the day, it was 1,000, then it went to 2,000, and now it's 2,200 beginning in 2025. And that is per qualifying child. So, my children are now grown, but I have 3 children, and if they all qualified for the child tax credit, that would have been great to have that on my tax return. Next, dependent care assistance program. So if you work for an employer who understands that in order for you to be gainfully employed, you have children and they need to go to daycare, or you're paying someone to come into your home and watch your children. Well, there's been this dependent care assistance dollar amount of $5,000 for a while. All right. And that was great because that was a tax-free fringe benefit that you would receive from your employer. What HR1 did is they increased it to $7,500. Now, this wasn't effective until January 1st of 2026. Next, we got the charitable contribution deduction. So they're limiting how much you can take in your charitable contribution deduction. So you still go through the calculation just like you always would, all right, with your 60%, 50%, 30%, 20%, if all of that applied to you. But it's also got a floor, all right? So, and that's not a typo, that's 0.5%. So not 5%, 0.5% floor, AGI floor on those charitable contribution deductions. Gambling. All right. So gambling income, we know, is going to get reported in our gross income. No way around that. But what they did with the gambling loss deduction is that previous law said that gambling losses were deductible to the extent of gambling income. The little twist on it now is that deduction is up to 90% of your total gambling losses, but not to exceed gambling winnings. So it's really the lesser of the two. You're taking gambling losses, you're multiplying by 90%, you're comparing that to your gambling winnings. It's going to be the lesser of the two, that you're able to take as a deduction. So for most people, that is a Schedule A itemized deduction, not a miscellaneous itemized deduction. HR1 got rid of all miscellaneous itemized deductions, but this one is an itemized deduction, kind of in that same area down at the bottom of Schedule A that you can take. All right, one other thing about charitable contributions, I probably could have added this to the previous bullet on the previous slide. There's an above the line deduction, yay. All right, so people who do not itemize, because if you itemized, you would have put them on Schedule A. But for people who are not itemizing, they can deduct up to $1,000 for single or $2,000 for married filing joint for any cash charitable contributions that you've made to a qualified organization. So that's good. All right, next. Trump accounts. I was just talking about Trump accounts with my youngest daughter who's going to be getting married. You can see here children born between January 1st of 2025 and December 31st of 2028 are eligible for a one-time $1,000 seed contribution from the U.S. Treasury, all right, under this thing called a Trump account. So just kind of joking with her about wanting another grandchild, and this would be a great time because we could set up this Trump account. There's also a $5,000 maximum, all right, for individuals and employers to contribute to this account. What happens is that when that child turns 18, it becomes what's just a traditional IRA and follows traditional IRA individual retirement account rules that you have to pay attention to. So in the year that that child turns 18, but you know, if you're making these contributions to that account, that's fantastic if you're able to do that. Now the energy credit was eliminated. All right, so it expired for qualifying expenses that were made after December 31st of 2025. So now in 2026, we don't have the energy credit anymore. The clean vehicle credit that expired as of September 30th of 2025. So again, now in 2026, there is no credit for the clean vehicle credit. So we don't have that anymore as well. All right, just a few in the business area for the reg section of the CPA exam. Bonus depreciation. So bonus has been up, down, you know, and I'm sure you were aware of the old rules with it getting phased out, right? And HR1 stepped in and said, we're going back to 100%. So because of HR1, bonus depreciation is at 100% for qualifying property. That's new and used, all right, property, as long as it was placed into service after January 19th of 2025. All right, so if it's prior to January 19th of 2025, you're using those old rules for just, you know, for those 19 days there, but after January 19th, 100% bonus. So lots of manufacturers, people who are buying equipment and machinery are very excited about this. We do have a new qualifying asset called a QPP. It's a qualifying production property. Again, people in manufacturing and production facilities are thrilled about this because it allows 100% expensing for certain types of expenditures in this area. Next. R&E. So R&E had been deductible, but we had to amortize it. All right. So the Tax Cuts and Jobs Act said that we had to amortize it over 5 years. If it was a foreign cost, it needed to be amortized over 15 years. HR1 has reinstated the ability for a business to immediately deduct research and development costs. So if you think of like a drug manufacturer, it can take 5, 7, 10 years before like a company like AbbVie, all right, a drug manufacturer, before that drug makes it to market and that you actually can start selling it and making a profit off of it, takes a long time. So they're putting a lot of money into the R&D. They had to amortize it over 5 years if it was domestic. Now they get to write it off. Okay, now if it's foreign, if the R&D is conducted outside the United States, then you still have that amortization of 15 years. But yeah, this was a great law change for people who have a lot of R&D. All right, business interest. If you remember the rule on how much you can take for business interest, all right, you're looking at it's limited to your business income plus 30% of what they called ATI, all right, your adjusted taxable income. And basically what you're doing is you are looking at your taxable income, excuse me, as your starting point, but then you are going to add back, all right, some of your expenses, your interest expense itself, depreciation, amortization. All right. So it's giving you a larger base to look at in order to be able to take that business interest expense deduction. So it's called EBITDA, which is the acronym for our earnings base that we're looking at to do that calculation. All right, Section 179, again, a favorable code section. We like Section 179 because it allows businesses to immediately expense the purchase of qualifying property. Now there's been limits, all right, so that expensing limit has been increased to 2.5 million with a threshold of 4 million, so that Section 179 can start phasing out. But for those of you who are already thinking ahead, bonus, right? Bonus depreciation. So we need to still know how to work with those, but between Section 179 and our bonus depreciation, you have a lot of people out there who are very happy with their businesses to be able to take that deduction. All right, next. All right, just a couple of more here. The advanced manufacturing investment credit. All right, so people who were involved in this particular area, they had a credit of 25% that's being bumped up to 35%. And then the corporate charitable contribution deduction. You already probably were aware, again, from either your coursework in school or by doing corporate tax returns, that the 10% rule, you know, the 10% cap on the corporation's taxable income. Now we have an additional floor. All right. So it's subject to a 1% floor and the existing 10% cap at looking at that corporation's taxable income. So contributions that exceed either the 1% floor or the 10% floor cap can be carried forward for up to five years. So at least you're not going to lose it. It's just that you're going to have some limitations on there. All right. Okay. I think that is about it there, Greg. You can take it over.
Okay, thanks, Suzanne. Now, depending on, excuse me, depending on how much tax work that you do in your current job, and some of you are, I'm sure, still in school, and you're just you're planning ahead, all right, which is great for starting to study for the CPA exam. But if you're already working, and whether or not what Suzanne just went over seemed like very overwhelming, or whether it seemed like, yep, I'm pretty comfortable with this, just really is a function of, you know, how much tax work are you doing in the current job that you have. So if you're working at a public accounting firm, you've probably gone through at least one, if not two or three seminars on that have gotten into the changes from OB3 in quite a bit of detail. But for many of you, I think what she just went over was probably brand new. And you're like, man, that's a lot. Well, it is. But remember, you know, she's just giving you kind of the 10,000 foot view of this, and not getting into the more of the details that help that you'll need to know in order to be able to answer questions on the exam with this. But the good news is all that's in the UWorld materials, right? It's all in the UWorld content. And once again, that's all being released in the digital platform later this week. And so don't feel intimidated by that. You'll be getting this information a little bit at a time as you go through the various chapters in the REG content in UWorld, and you'll be able to absorb it. There'll be application problems for you to work and those types of things. Now, what I'm going to cover, which is going to be a little bit shorter than what Suzanne just went over, is new tax law changes from OB3 that impact what is tested on TCP. Now, while this is shorter, it's also more complicated in certain areas. And it's also probably less, you'll see it as less relevant, right? So a lot of what Suzanne talked about, we can relate to in our everyday lives, right? I mean, most of us, when we buy a car, we got to borrow some money to do that. So being able to deduct the auto loan interest as an additional deduction, we can relate to that. These topics tend to be a little more complex and related to business entities. So I warn you about that at the beginning. The first one deals actually. Now remember, I told you back with the highlights of what's on TCP that about 40% of that is more advanced individual topics. So the alternative minimum tax for individuals is tested on TCP. There also is an AMT for corporations, but it only applies to about, literally no more than about 60 or 70 C corporations in the United States. Not 50 or 60%, 50 or 60 total would the corporate AMT potentially apply to. So only like your Fortune 100 companies. But this is for the individual AMT. And one of the most important things for the individual AMT is the exemption amount. It's that exemption amount that allows most Americans, probably 90%, maybe even 95% of us to not have to end up having to pay additional taxes because of the alternative minimum tax. But the phase out threshold, now the AMT exemption itself is indexed for inflation. Remember, anything that is indexed for inflation, you do not have to memorize for the exam. Okay, that will be given to you on the exam. So things like your standard deduction amounts. Suzanne mentioned phase out levels, like for the itemized deduction phase out and the additional deduction phase out. Those most of those are indexed for inflation, and so those amounts will be given to you. This one's also indexed for inflation, but that AMT exemption amount's actually been decreased, okay, from what it was in 2025. Okay, going into 2026, it's actually been decreased. Most of what Suzanne talked about is she's like, we like this. It's a good thing. It's going to help save taxes. This is not a good thing, right? Because your exemption is less now, which means more people are potentially subject to the alternative minimum tax. And then also notice that the phase out percentage of your exemption. So once your alternative minimum taxable income gets above a certain level, you start losing your exemption amount. Okay, and the exemption amount can go all the way to zero. So higher income taxpayers, for many of them, the AMT exemption is zero. Well, now it's going to go to zero much more quickly, because now once you compute your excess AMTI, the phase out's 50% of that instead of 25% of that. One of the things that's tested in TCP is multinational multinational businesses. Okay, I guess is the best way to say that. And the next two changes I'm going to talk about relate to those that have multinational income. When you have multinational income, the general way that the U.S. tax system is set up is that U.S. taxpayers, whether we're corporations or individuals, we're subject to U.S. income tax on our worldwide income. Okay, so income earned all over the world, not just in the United States, but in other countries also, is subject and goes on our U.S. income tax returns. You may say, well, then that would result in double taxation, wouldn't it? Because if I earn some income in Germany, Germany's probably going to tax it. Now you're saying I got to put it on my U.S. income tax return also. Well, yes, in a sense, it could be double tax, but the U.S. government also allows you to take what's known as a foreign tax credit. And the foreign tax credit gives you, to the extent you pay foreign taxes, it allows you to reduce your U.S. tax liability. So the purpose of that is to mitigate or maybe even completely eliminate the double taxation. So why am I getting into that? Well, when you're computing your foreign tax credit, as well as certain other computations related when you have foreign income, you have to know whether income is U.S. sourced. So was it sourced or earned in the United States, or is it foreign sourced? Okay, you got to put it in one of those two categories. And so there was a change for this with OB3. So before 2020, in 2025 and before, basically, if you had inventory that was produced in the United States and you sold it, since it was produced in the United States, it was going to be considered U.S. source income. Now, even some income that was produced in the United States could end up being classified as foreign source income. Notice it says that the portion of income from a taxpayer's sale of inventory that is produced in the United States that is attributable to the seller's foreign office, then that would be, if in that case, it would be classified as foreign source income. The amount treated as foreign source is capped at 50% of the taxable income from the sale of the inventory. So this is something that if it was tested, likely would be tested like in a multiple choice question. The second major change, okay, related to multinational taxation from OB3 has to do with what was formerly known as its acronym was the GILTI tax. GILTI. So what in the world does GILTI mean? Well, if you see it on that first sub-bullet there, Global Intangible Low Income Tax. Okay, that was the acronym is GILTI, and it's basically called a GILTI anti-deferral regime. But this was something that was put in by the 2017 Jobs Act. Okay, the GILTI tax, and in general, why it was put in is the United States Congress felt like that too many U.S.-based companies were transferring their intangible assets offshore. So, for example, Google and Apple, they've shifted a lot of the ownership of their patents and other types of intangible assets to foreign countries, and they're doing that to reduce their overall tax liability, and so Congress felt like that had gotten to an extreme, and so for basically, to keep it as simple as I can, for companies who maybe are doing that, they're now subject to this additional tax. Okay, that was called the GILTI tax. All right, so what did OB3 change? OB3 said we're not going to call it GILTI anymore. Okay, we're going to call it this net CFC tested income. CFC stands for Controlled Foreign Corporation, but you can see there on the slide, it's basically a global minimum tax on income that's generated by intangible assets. Okay, that gets back to the logic of why they put this in. Now, this is complicated enough that I think it's very unlikely you're like going to have a very detailed, complicated computational problem with this, but it's something that could be tested with them looking to see, well, let's just make sure they understand the basics of this tax, which that's the next bullet point. This is computed at the shareholder level. Okay, so the tax is not actually paid by the corporation like Google or Apple. It's paid by the shareholders who own stock in Google, which could be another corporation or it could be individuals. So as I mentioned, beginning in 2026, the GILTI name and formula, they've eliminated that. They've actually made the formula simpler now to apply. All they're including in the formula is the net controlled foreign corporation tested income. A few other kind of characteristics of this tax is notice that this net CFC taxable income, remember, it's like a penalty tax. If you're that's levied on income earned from intangible assets overseas, it does not include the following items though. So subpart F income, that's something you're going to want to know what it is before you take TCP. I don't have time to explain tonight, but subpart F income is a very basic part of multinational taxation. But subpart F income kind of already has its own tax associated with that. So they're like, okay, we're not subpart F income, we're not going to include in this. And then income that's connected with U.S. trades or businesses, they're not going to include that. Okay, their concern is that income that's being earned offshore, and then certain dividends and oil and gas income. So here's a few other of those basic characteristics of the net CFC tested income that once again can be tested in multiple choice question. Once you do the computation, this is treated as ordinary income. All right, so it's not capital gain. But notice if you're a U.S. shareholder in a controlled foreign corporation, you get a 40% deduction against your this net CFC tested income. So Suzanne reminded you a little bit about the QBI deduction, which is a 20% of your QBI. Okay, a little bit similar concept here, except here it's a 40% deduction that U.S. shareholders qualify for. And then this is really strange because, you know, if this was in a multiple choice question and somebody hadn't gone over it, probably no way they would guess this is the answer. But notice an individual U.S. shareholder can elect to be taxed as a C corporation for purposes of this income inclusion. So I'm an individual. I own some stock in a foreign corporation. I'm subject to this tax, but I can elect just for purposes of this tax to be treated as a C corporation. Why would I want to do that? That gives me that 40% deduction. And then the foreign tax credit that I mentioned earlier is also allowed against this tax. Okay, so that's it for the for the multinational. You're like, that's good, man. My head's about to explode with this. Let me say one other thing about this is for REG and TCP, but you know, you saw those pass rates I showed you earlier, right? So they're really high on REG, even higher on TCP, which indicates to me that in these more complicated topics, right, at least right now, they are testing some of the more basic concepts with these, and that's kind of the theme. I've been teaching CPA review courses for over 30 years. And that's a theme that I've always seen is that I use this 90% rule. About 90% of the questions they ask in tax are not that complicated. Okay. They're not that complicated. But what makes tax difficult? What makes it difficult is there's so many things they can ask you. All right. That's what makes it difficult. Now there are the 10%ers. And if you had a question on the things I just went over, that'd be a 10%er. Suzanne mentioned that the energy credits and things have been repealed by OB3 for individuals. Also, the same thing for businesses and for corporations here. This energy efficient commercial building. This ends as of June 30th, 2026. And then so we got one more day. And then also the clean vehicle credit, that's also eliminated for businesses. Paid medical and family leave credit. This has been around for a while, but what they've changed now for this is you know, businesses under federal law, they have to allow employees to have time off. They can't fire them like if they need medical leave for having a child or some other type of illness, but it doesn't say they have to pay them. Well, this says, look, if you pay your employees, we're going to give you a credit for a portion of that. This now says, well, not just in addition to getting if you pay your employees, if you pay an insurance company to take out an insurance policy, and then that insurance policy will reimburse your employees for their compensation if they're on medical or family leave, we'll let you get a credit for what you're paying that insurance company. Okay, that's basically the change there. Opportunity zones, I'm not going to get into detail with these, but these were first put in by the Jobs Act of 2017. And these are basically encouraging folks to invest in areas of our country where the median income is lower, there's more poverty. And so historically, those with money have not wanted to invest there. And so the government, these have been a big success. So these have been extended by OB3. It's expanded the number of opportunity zones in the United States that are out there. And notice the last bullet point here. Those who invest in, say, businesses in opportunity zones, they can defer capital gain recognition for up to 5 years and receive basis increases after a 5-year holding period, enhancing tax benefits. That's the encouragement they have there. And then the employee retention credit, this was something going on back during COVID. And there's just been a lot of fraud with this. And so they put some things in to strengthen, put even more teeth into going after those who were committing fraud with this. Notice this imposes a $1,000 penalty per violation for those who were promoting folks taking these credits improperly. And they failed to meet the proper due diligence standards in assisting with those. And then the very last thing here is just with tax exempt organizations. The Jobs Act of 2017 started taxing the largest private universities who have very large endowments, started leveling a net investment income tax on their endowments. And it was set at 1.4%. So now with the Jobs Act, with OB3, you can see here Now this rate could go up to 4% or 8%. This is only for what we might call the richest universities, like the Ivy League schools, because notice the endowment per student has to be in excess of $2 million in order before it gets up to that 8%. And then the estate, the unified credit that applies to the estate and gift tax, OB3 increased that to $15 million. Okay, so that completes the overview of OB3 for REG and TCP. After Jared comes on and talks a little bit more about the ins and outs of what UWorld has to offer you, Suzanne and I are going to come back and now dig into those task-based simulations and show you more what those are like and go through a couple of sample of those with you.
Yeah, thank you, Greg. I appreciate it. So to share a little more information just on UWorld while we're here. So all of the study materials in our review, but back step. So a little history on UWorld in case you're unaware. UWorld acquired Rogers CPA Review about 7 years ago, 7, 8 years ago. Then Wiley Efficient Learning to Wiley CPA Review course 3+ years ago. And then actually what's not even on here is recently acquired Surgent and their CPA and CPE product along with their other products as well. Throw that in with our great group of instructors and everything else, and it's a great course to set you up for success on the exam. Everything's clearly mapped to the blueprints, and we can even dive into what the course kind of looks like a little bit now. So you're going to start with that dynamic study planner. So this allows you to build your study schedule and to customize it. You can do a set schedule and even customize that within by selecting certain pieces of it, doing a more flex schedule, which allows you to kind of be more flexible in the order in which you go through your course. And then you can even fully customize your schedule as well. You'll select your start and end date, and that can even be adjusted after the fact as well. While you're going through that process, you're going to be able to set your study pace in terms to how many minutes per question. Do you like faster video playback speed? How many hours per day you would like to study? And then once you've built all that, a bar at the top, which isn't shown on the screen, will go from gray to red to green. And once it's green, your study schedule has enough hours built in it for you to meet your study plan needs. And then it'll give you the study planner, what you need to accomplish each day. And you can view that from a week, month, or day view. We have a great group of instructors. As you can see here, obviously, I know we have 2 of our great instructors on with us tonight going over with this webinar, but also a great set of instructors from across the country in various roles, whether in academia or national instructors or still working in whether public accounting or industry. So it's a great group. We have engaging lectures. I think this is something that's very important. There's no just, hey, we're putting a slide up and talking over it. You're going to have actually real expert instruction throughout these lectures that also will have the ebook that follows along with it. This is where I think we really start to stand out, and it's multiple pieces. One, we take the percentage of others UWorld users and what percentage of them answered each response of a question. So that's part one. You're going to be able to see how you're comparing to other users studying for the exam or other students studying for the exam. But then the other piece is you're going to get vivid illustrations. So every question is going to have a table or a graphic of some kind, and then a very detailed explanation to why the answer is right or wrong. So in this case, here's why A is right, and here's why B, C, and D are wrong. It's very important that you are not just studying and memorizing, that you're actually actively learning and gaining and retaining that knowledge. You're going to have a key takeaway of something to remember from that question or that type of question, and always a reference back to the blueprints. The other part where we really stand out is our Smart Path. And so if you're not familiar with our Smart Path, what this is we've taken others' self-reported data from UWorld users who have passed the exam on their first attempt and where they were in the review course when they passed the exam. We take a little different approach. We take what I call a efficient but effective approach to studying for this exam. So by following this Smart Path and a few other pieces, which I'll talk about later, and hitting at least 75% of these targets, we're seeing a 90% success rate on the exam. I know they're going to talk some task-based simulations, but one thing that's very important within our course is our mastery videos. So you're going to be able to go through a task-based simulation and then watch a video on how to solve that exact problem, whether you got it all right and you're still not sure why you got part of it right, or you got part of it right, part of it wrong, or all of it wrong. You have the ability to go step by step through that process from one of our instructors. We also have resources in the review course that just show you how to work through certain types of task-based simulation videos, whether it's document review, etc. Boot camps, these are great things. So there are some, if they've occurred in the past, they're already in our course and they're recorded, but we also have live boot camps that occur throughout the year as well. And so these are some of the maybe harder topic areas of certain sections, and you can attend them in real time. Ask questions, they'll focus on, kind of a highly tested exam topic, test taking strategies, and kind of mastering those challenging multiple choice questions and task-based simulations. Mock exams and exam sims. So very important. You should be starting these about 2 weeks before your exam, aiming for 3 practice sessions. So you have the exam sims, which are going to kind of mirror the format of the CPA exam, but going to take existing questions from the course that you may have already seen. And then there's going to be our mock exams, which are going to be unique questions. You need to treat that like the actual exam. 4 hours set aside, uninterrupted, and going through and taking it like you're taking the exam. And obviously we have, gives you scores and all of that to tell you what we think you'll do on the exam in terms of percentage chance of passing. So this is where I talked a little bit more about Smart Path. I obviously dove into it a little bit there, but 75% of your Smart Path targets hit, at least 60 days of studying, and then 100 practice quizzes, which are what we call basically the homeworks. So, or multiple practice quizzes, whether it's multiple choice or task-based simulation. But if you do all those things, we are seeing that 90% pass rate on the exam. And one of my last slides of the night, we have a discount for anybody attending this webinar if you are not already a UWorld customer. So keep that in mind that this is here an option for you. You can scan that QR code. It's $2,099 for our Elite Unlimited course, which comes with all our multiple choice, all our task-based simulation, the hard copy books, the lectures, mock exams, etc. The full list is there. There will be a QR code later in the slide deck as well if you miss it there, and also the slide deck will be shared out. The presentation or the recording will be shared out with you within 48 hours.
Okay, thanks, Jared. I mean, that's about $500 per part, right? So, your 3, odd, reg, and FAR, the 3 parts everyone's got to take, and then your discipline exam. So that's certainly a great price, and you really need a structured approach like this to pass the exam, but there's more to. I mean, the most important thing is pass an exam, right? But you also want to pass the exam as efficiently as you can, because you're all busy people, right? You've got busy lives, and so, like I said, some of you may still be in school, but most of you have probably already started working. Some of you have families, some of you have children, some have other types of family responsibilities. other things that you're engaged in your life. So you want that to be as efficient as you can. And so, you know, that's what, you know, the team of instructors that we have at UWorld, that's what we do, right? We take all this, like in tax, get my hands here where you can still see them, but you take all the tax content, but you're trying to narrow it down to what are the things that are most likely to be tested on the exam, and then really help you drill hard on those areas so you can be well prepared for those. So the next segment now, I'm going to have a few slides here to talk about preparation for task-based simulations. And task-based simulations, as I mentioned earlier, these are 50% of the score on all 6 parts, okay, of the CPA exam. So there's the AICPA has said that there's a significant priority. If you want to be a CPA, you got to show that you have these higher level problem solving skills. And that's one of the reasons that the brand of the CPA is so great in the business community, in the business world, and why it's worth getting, okay? Because it doesn't just show that you have a broad-based knowledge of accounting. It shows that, but I'll be honest, I don't even think that's the most important part of having the CPA on your resume. The most important part of having a CPA on your resume is that it shows you're an excellent problem solver. You're an excellent thinker. And also it shows that you have the work ethic and the maturity to take on a large task like this and accomplish it. All right, so let me talk more about TBSs. So with the CPA evolution, in the blueprints, the AICPA gives us what are known as representative tasks. All right, and the representative tasks detail out the areas that where the material is coming from, the types of things that are going to be tested, in this case on REG. These are actual examples of representative tasks for task-based simulations in regulation, to give you a sense of the types of things you're going to be doing. So review and resolve discrepancies identified by automatic diagnostic and validation checks to ensure the completeness and accuracy of, and I put ... there because they got this language on 2 or 3 different representative tasks, and then they have different areas that they'll put language there at the end. But even if you don't work in the tax area, a lot of you have probably used something like TurboTax, right? And so once you get to the end of TurboTax, that's what I use. You get to the end and it checks for errors, right? And it comes back and it gives you these diagnostics. That's exactly what this is. So they give you data, they give you information, they give you facts, they give you exhibits, and then they also give you a tax return that's already been completed and it has been run through a diagnostic system, and they're giving you the diagnostics. And then you have to go in, you have to read the diagnostic and go back into the tax form that's already been filed, and then look at the data, information that relates to that, to determine if the information is actually accurate or not. And if it's not accurate, how do you correct it? Review Form 1040 and supporting documentation, including any source data used to create the return, to determine the accuracy of. So once again, now this is where you're actually reviewing a tax form. Now, when it says a tax return, they're not going to give you something with 12 forms on it, right? But they may give you just a Schedule A for an itemized deduction. They may give you a 1040 and say a Schedule 1, or the new Schedule 1A Suzanne talked about. Review a C corporation's trial balance and supporting documentation, including relevant source data, to determine the completeness of the book tax differences, the M1, what's called the M1 reconciliation, reported on a corporate income tax return. And then review 1120S, that's a return for an S corporation, or Form 1065, the return for a partnership, including any source data to determine, once again, the completeness and accuracy of how ordinary business income or loss was computed, including separately stated items. So these just giving you a sense of like types of things that you may encounter. And when you see this, you may say, man, I think I need to practice those kind of things. Yeah, that's why you need a great CPA review course like UWorld's. These are just 2 examples for TCP. review an individual's basis schedules and supporting documentation for a pass-through entity, that'd be a partnership or LLC or S Corp, including any source data to confirm the correct allocation of a loss, okay, a loss that flowed through from the pass-through entity between the amount suspended under the at-risk limitations or the passive activity loss rules. So that's a more advanced individual topic, your passive activity loss limitation rules tested on TCP. This is the type of TCP task that may address that. Review and resolve discrepancies identified by, once again, automated diagnostic and validation checks to ensure the completeness and accuracy of the amount and character of a gain or loss reported on a tax return based on the source documents. I mentioned earlier to you that most of the property transaction topics are on TCP. So to know how to take amount realized minus adjusted basis and get a gain or loss, you need to know that for reg. But things like Section 1231 assets, Section 1245 and 1250 depreciation and recapture, your look back rule for Section 1231, and then things like like-kind exchanges and voluntary conversions, related party losses, all of that information is that's going to be on TCP. And that's what this diagnostic here would, that representative task refers to. So what are some strategies here? So once again, these are scenario-based questions testing higher level learning skills. They're going to provide you with exhibits, source documents, maybe emails that were sent to the tax preparer or sent to someone else. Usually you're going to be answering a series of questions for one task-based simulations. So you may be entering data into a box. You may be picking a choice from a drop-down menu. Research task-based simulations work a little different. Talk about those in a minute. It may include working with spreadsheets. You may be responding once again to diagnostics from tax return preparation software. There'll be 8 total task-based simulations in REG and in TCP. These are spread over 3 testlets. So one testlet will have 2 and 2 at TBSs. The other 2 testlets will have 3 TBSs. And time management is just really important here. All right. So you don't want to get bogged down in one and spend way too much time on one. So you got to pay attention to your time, and that's why you want to practice these. I'll be honest with you, the law that you need to know to answer task-based simulations, it's the same law you need to answer multiple choice questions. But the main thing that you're learning with task-based simulations is how to take a lot of information and what's the most efficient way to process that, analyze it, and answer the questions. The only way that you develop that skill is just practicing that. And with those video solutions that Jared was showing you, Suzanne and I, we've done a lot of walkthrough solution videos for task-based simulations. Okay, and so you actually can watch us solve those and see how we work through it to learn that process. If you're short on time and the TBS has a drop-down menu before you go to the next part of the exam, make sure you click on the drop-down window and just pick one, right? I mean, don't leave something unanswered. I mean, if it's data entry, I mean, you probably just need to move on, right? Because the odds you're just going to guess the right answer is pretty much slim to none. But some strategies for these task-based simulations: get the lay of the land, look and see how many exhibits there are. Read the question stem very carefully to see what information they're giving you there. Look and see if it's drop-down menus or number inputs. And then ask yourself, now, what tax area is being tested here? And the ones that Suzanne and I are getting ready to go over, you'll see how we do that. Does the TBS contain any tax forms? Sometimes they do, sometimes they don't. If there are exhibits, you need to review those carefully to see what is in those, right? And take a mental inventory of what's being provided. Now, you're actually going to be with the TBS as you're practicing working on in the UWorld software. It looks just like it does on the CPA exam. And so you'll get accustomed of how you can open exhibits up and minimize them and move them around so you can manage that well. Do not lose sleep over subtotals on TBSs, okay? Because they give a lot of partial credit. So if you got one answer wrong at the beginning, it's not going to cause you to lose more points later on in the TBS. A document review simulation is kind of like the granddaddy of task-based simulations. Okay, it's the ones that take the most time. A document review simulation could take 30 minutes, 35 minutes to do. You may have some other task-based simulations you can do in 6, 7, 8 minutes. Okay, but these tend to have quite a few exhibits. And what these have usually is it's like something you're reading, and it's got some sentences underlined, and then you have to indicate whether that sentence is correct, or if one of the other 4 or 5 choices on a drop-down menu that rewords the sentence is actually the correct wording. And so once again, a lot of examples of those in UWorld. Notice some strategies here. Skim over the questions. Probably before you look at the exhibits, skim the questions so you kind of know the topic areas you're looking for in the exhibits. And then review the answer options. The answer choices can help you solve the questions by working backwards. You see, what that's meaning is, especially you feel a little bit lost on a question, if it's got a drop-down menu, I mean, it's going to be one of those 5 options, right? So do the drop-down window, see what they are. That'll get you focused in better on what they're really testing. Okay, that's a great test taking tip right there. Okay, so what we're going to turn to now is actually looking at some TBSs, and you're probably tired of hearing me talk for a while. So Suzanne, you still awake over there?
I am wide awake.
Well, that's good. All right, I'm going to turn it over to you.
Ready to go. Ready to go. All right. Thanks, Greg. All right, so I'm going to be covering a task-based simulation for REG. You know, when they started introducing TBSs and they're saying they're 50% of the exam, I remember thinking, boy, I would have actually enjoyed that. Don't fear these. If you're a good problem solver and you're good at, at following steps, this is a puzzle and you're just kind of taking pieces of that puzzle and you're trying to figure out how they fit. Like Greg said, they're not testing different material. It's the material that you've already studied for those multiple choice questions. But for me, as a test taker, I always did better on the problem solving. Let me show you my steps. Let me show you my work. And you don't get to do that in a multiple choice question. It's either right or wrong. I'd be that person who'd narrow it down to 2 choices and, worry about choosing the wrong one. But with a simulation, it's not an all or nothing. Right? There's steps to it. And so Greg was talking about some of those strategies that you can go over about, number of exhibits, starting at the end, looking at the question stem and reading backwards, looking at the drop-down menu. Just in our solution walkthrough videos, not just Greg and I, but the other faculty as well that are teaching, we give you those strategies while you're going through it, because every TBS is going to be a little different. And so you need to know how to approach each one of those. So again, I'm going to be doing a REG. So mine is going to be focusing on itemized deductions. So the representative task that's coming from the blueprint in which the UWorld material was designed off of, so you would be fully prepared to be able to do these TBSs. It says identify itemized deductions allowed in the calculation of taxable income, given a specific scenario, including medical expenses, qualified resident interest expense, casualty losses, taxes, and charitable contributions. So yeah, we're looking at Schedule A there. We're talking about itemized deductions. All right, so when you're reading through, all right, you could have multiple TBSs that you're going through, and you do need to pay attention to your time, because you don't want to get lost wasting time. And so what you're seeing here in front of you is the narrative. So it says scroll down to complete all parts of this task. Now, we're not quite sure what this is about, but when I start reading through it, all right, I can see right away, it says that it has itemized his deductions. So I might have an idea of how this problem is going to go. So just give me a moment. Let's read through it, just like you would do on the exam. And then let me tell you about some of the things I would focus on if I were looking at this narrative. So it says John, age 38, is a single taxpayer and is the sales manager of Standard Company, an auto stereo dealer. John's AGI for the year is $67,000, and he itemizes his deductions for the current year. Although John's mother does not live with him, he provides over 50% of her support. John's mother incurred unreimbursed medical expenses during the year. Because she was unable to pay these expenses, medical expenses herself, John paid them on her behalf. His mother's gross income for the current year is $10,000. During the year, John paid the expenses shown in the table below. The amount of each expense shown in the table is net of any insurance reimbursements received. Now you're going to see that we had to break up the narrative just so that you could read it clearly on the slide. Obviously, you would have access to all of this. But on that previous slide, when I'm looking at, it was talking about the mother. Now, I'm not exactly sure which direction this TBS is going quite yet. It says he itemizes his deductions, so that's kind of cluing me in that I might have a Schedule A itemized deduction question. When I see the middle paragraph, I'm thinking about dependency, support. We have the mom. He's paying some of her medical expenses. It tells us what her gross income is. So I'm already in my head trying to think, well, is the mom a qualifying relative? Does she qualify as a dependent? So these are just some of the things. Now, when I go to the rest of the narrative on the next slide, it's going to give me the entry instruction. So it's telling me exactly what it needs me to do. All right. For rows 2 through 8, enter the amounts in column C that are deductible, unreimbursed medical expenses on John's Schedule A. All right, so I am doing a Schedule A, but I'm focusing on medical expenses. So that's narrowing it down for me, because sometimes they can have you do a box of data entry in which you are having to calculate the entire Schedule A. It says for line 9, provide the total deductible medical expenses before any AGI limitation. Again, in my mind, I already know what that is. We know that AGI limitation is 7.5% of my AGI. So line 10, provide the amount of the statutory limitation. For line 11, provide the total amount of medical expenses John can deduct. And then enter all amounts as positive whole numbers. If no portion of the unreimbursed expenses is allowable medical expense, enter as 0. Do not leave any rows blank. This is important, guys. Don't just give up points, right? If it says don't leave any rows blank, then don't leave any rows blank. You want to make sure that you're following the instructions. You know, again, let's just say it was a 10-point problem. It's more than that, but let's just say it was 10. And you left one blank, right? Now you're down to an 8. All right, right away, right there, you're down to 8 because you left something blank. So if they're telling you to fill it in, make sure that you fill it in. All right, now here's our table that they're referring to. And we have a TBS that's called a data entry TBS, because they're not having us review a statement and looking at, underlying statements underlined and see if that's correct or not. They're not having us look at a drop-down menu. Instead, it says, read this to the left. Here's the dollar amount that we're referring to in column B. What do you think? All right. So amount reportable on Schedule A. So that is the deductible part. And you're trying to figure out, is it deductible or not? And then eventually down on line 9, we'll do a calculation. 10 is the statutory limitation. And then finally on line 11, what are my total deductible medical expenses on Schedule A? So I know what I'm solving for now. All right, so it's a data entry. I'm going to be writing in those amounts here in column C. So let's go through each one. Go back, please. We have group health insurance premiums paid by John's employer. So we think about health insurance premiums. Okay, health insurance premiums, are those deductible or not? Well, who paid them? All right, so again, I'm just kind of reading through this and I'm thinking, kind of maybe making some notes to myself about whether I think that that's a deductible expense or not. Disability insurance premiums paid by John. Okay, good, paid by John, but are they medical expenses? They're disability insurance premiums. All right, so again, I'm thinking about, is that deductible or not? Vision correction surgery for John. All right, so how familiar am I with the list of eligible qualifying medical expense deductions? All right, and that would fall under one, vision correction, so yes. Hair transplant procedure for John. So we're probably thinking about, well, is that considered cosmetic? Did he really need that? Was there a medical need for that? Probably not. So then that would not be deductible. We've got line 6, cosmetic surgery to remove a birthmark on John's hand. Now, I'm not going to say that a birthmark might not be a cosmetic event that you feel is necessary to remove medically. It says though that it's on John's hand. And so when you see that it's on John's hand, this cosmetic surgery was not from a disfigurement. It didn't say anything about him being in a car accident or in a fire or anything in that regard. And so instead, it's really just to remove a birthmark on his hand. Hearing aids for John's mother. The cost was charged to John's credit card in December of the current year and paid in January of the next year. This question actually has two issues, right? It's, can John take a deduction for his mom's medical expenses, which kind of gets into, well, is she a dependent or isn't she, or is she not a dependent? Is there any exception to the rule there with that? So there's that. And then there's the timing. It hit his credit card in December, but it wasn't paid. The credit card wasn't paid until January of the next year. So is it deductible or not in the December year? And then we've got dental work for John's mother paid by John. All right, again, that gets into the mom, you know, these medical expenses that John is making on behalf of his mom, you know, are those deductible? All right, so we're going to be entering, not quite yet, but we're going to be entering things in column C. And then in line 9, it's saying add them up, total deductible medical expenses before any limitation. Then you got your statutory limitation of 7.5% of your AGI to finally get to your total deductible medical on line 11. Okay, next slide. So here's some common types of medical expenses, and this is provided in the UWorld material. Now, of course, this is not going to be provided to you when you're taking the TBS, but we're kind of walking through the solution now to show you how you would arrive at your answer. Okay, so you can see here when you're looking at vision that yes, corrective eye surgery is listed as one. You can see that we have different types of medical expenses. Plastic surgery, it says only if directly related to a congenital abnormality, a personal injury, or a disfiguring disease. And so the birthmark on the hand, I wouldn't call that, don't think that that falls in that area. Hearing aids, yes, you know, are allowed. And then there's other types of medical expenses as well. So again, we would be adding all these up, and then we've got to pay attention to our statutory limitation. All right, next slide. All right, so now this is just kind of going through the explanation that you would see in the UWorld material, but this is what you would be doing, right? You would be figuring out the deductibility. So the very first item that was listed, well, first two items, we're looking at the health insurance premiums that were paid by the employer and any disability premium. So that health insurance, the employer, all right, the employer was paying that health insurance premium. So John was not paying that health insurance premium. So that would not be deductible. All right. If John did pay it, you need to be aware of this wording called using after-tax dollars, okay, or using pre-tax dollars to make sure you know that if John had paid it, whether that would be a deductible expense or not for him. Now, we didn't have that in this situation because the employer paid it. All right. But that you would have to pay attention to. And then premiums paid for your disability insurance are not deductible. All right. So as it turns out that we would not have anything deductible in that area. All right. Vision correction surgery for John. All right. Yeah, that is a qualified medical expense. So that would be a deductible type of medical expense. 5 and 6, we had hair transplant and the cosmetic surgery. So again, the cost of cosmetic surgery, if it is a qualifying expense for that was, you know, that you had the cosmetic surgery for, then it would be deductible. All right. But in the circumstance that they're explaining, all right, they had hair transplant and the cosmetic surgery to remove the birthmark. Yeah, neither one of those are deductible. All right, that's just to improve your general appearance and not necessarily because of a medical reason. And then rows 7 and 8, we're dealing with John's mom. All right, so the general rule is that the taxpayer can take a deduction for medical expenses paid for themselves, their spouse, or a dependent. And so that's the general rule. However, medical expenses can be taken on behalf of other people for whom the taxpayer provides greater than 50% of the support even though they might not qualify as a dependent. Now, mom does not need to live with John to qualify as his dependent, but there was one thing that was given in the narrative that indicates to you that she is not his dependent. So even though he was paying greater than 50%, she's not a dependent. Why? Because she failed the gross income test. She had $10,000 of income. She failed the gross income test. But that's still not going to stop John, all right? Because he did provide greater than 50% of his mom's support, all right? He is going to be able to deduct the medical expenses paid by him on her behalf, all right? So both the cost of the hearing aids and the dental work are qualifying expenditures and would be deductible. The other issue was timing. It said that they hit one, I don't remember which one of them hit the credit card in December and he didn't pay it until January. Well, he's a cash basis taxpayer, right, as an individual. And so you're paying attention to when he actually had the liability. Well, the liability was established, all right, actually in the December year. So he would then be able to deduct those expenses when it actually hit his credit card. All right, next line. All right, so now we're just adding it up, right? So we're going through the calculation. So you got the vision correction surgery, the hearing aids, and the dental expenses. So you have total qualifying medical expenses of $5,270. 7.5% of the AGI, all right? AGI was given in the narrative of 67,000, so that's 5,025. So when it's all said and done, the net deductible medical expenses are $245. And on the next slide, it's actually going to show you the table that's been completed. So this is what you would have done. So you would have gone through everything that I did when you were figuring out whether something is deductible or not, and then just making sure that you enter. Now, I will say that you can't see this test taking tip that I'm going to give you. We can't emulate that here on this PowerPoint slide. But when you enter your number, don't forget to hit accept. All right. If you don't hit accept, it's not going to record your number. So even when you got those zeros, enter 0, hit accept, enter 0, hit accept, enter 2,400, hit accept, and so on. Otherwise, it's not going to record your answer and you're going to get marked wrong. So don't forget to do that. All right. I think, Greg, that was my last slide for the reg. Yeah. All right. Test-based simulation. Take it over.
I'm still awake over here also. So I'm in Alabama and she's in near Chicago. But anyway, yeah, so this is the last major thing. I know you've been here for about 1 hour and 45 minutes. Appreciate you being here tonight. Appreciate your patience. I'm going to go through a TCP, task-based simulation, and then Jared's going to come back just at the very end to close us out. But before I do that, because I'm afraid I'll forget if I don't do it now, Jared also mentioned just a few minutes ago about boot camps. And Suzanne and I, over the last 2.5 years, have done a lot of boot camps. So we've probably up to, I know we've done well over 20, maybe 25. And as Jared mentioned, those recordings are available. We have more scheduled, okay, for the rest of the year. Once again, our boot camps relate just to REG or TCP. And it says, you know, when you sign up for it, you can see which ones are for REG or TCP. So I did want to mention to you that those are available. And for those, you know, we do a much deeper dive into, you know, we'll spend 2 hours. I may spend an hour on one chapter. Suzanne will spend an hour on another chapter. Okay. So I did want to mention those are available. So for this TCP task-based simulation, it says review an individual's projected income and expenses prior to year end to determine the tax implications and provide options to minimize tax liability given a specific planning scenario. So at first glance, you may say, well, it sounds a little similar to the one Suzanne just did in REG. You know, hers was itemized. It was for an individual, right? Had to do with deductions specifically. Well, you're going to see pretty quickly here that no, this is dealing with more advanced topic. Now, this is actually not part of the simulation question. This is part of the solution that UWorld has provided. But this is really a big picture slide. In other words, they're just trying to help you as you're thinking about the various types of things that you could be asked to do when you're in that, in that computer studio actually taking TCP. Other types of tax planning questions that they might ask in a TBS, such as, is there income the taxpayer can control when it's taxed, right? Can you defer some income, or can you accelerate deductions? Can you structure a transaction as a like-kind exchange so you can defer gains and losses? Could you have some income be capital gaining, long-term capital gain instead of ordinary income? Not going to read all of these, but can the taxpayer qualify as head of household instead of filing single? The last bullet point, has the required holding periods for qualified stock options been met? This is, once again, just to kind of help you kind of get inside the black box a little bit and say, oh, okay, now I see some of the types of things that they might be asking from a tax planning perspective. So this is the actual scenario. Ryan and Brittany are married, both age 50, visit their CPA in year 3, seeking advice regarding what tax planning steps can be taken this year to minimize their tax liability. Their marginal tax rate is 22%, and their preferential tax rate, which means their long-term capital gains rate, is 15%. Now, the standard deduction here, you might say, well, that's not the standard deduction for 2025 or 2026. It's not. Remember, it's indexed for inflation. And so on the exam, I mean, they'll tell you what to assume the standard deduction is. They may give you the proper amount, the actual amount for the 2026, the year you're taking the return. They might tell you to assume some other number. The following financial information is provided. Now note there's 3 bullet points here, and there's 3 bullet points on the next slide. So there's 6 total bullet points. So there's actually going to be 6 different issues here. The first one, Ryan works for an international company. He's been working in Scotland since October 1st of year 2. Now, what year are we in now? Current year is year 3. He took a 16-day vacation in December year 2 to return home to the United States. He currently is spending 21 days in June of year 3 to visit his wife in the United States. And so he's trying to decide, he's going to move back to the U.S. Should I move back on October 2nd or November 1st? Now, if you're not familiar with the foreign earned income exclusion, right now you would not, there's not like a tax rule or tax law or tax area that's going to pop in your head. You do realize he's working internationally, so it should prompt at least, are there some special rules related to those who are earning foreign earned income because they're working abroad? But if you hadn't actually been through the foreign earned income exclusion rule, this one would be going over your head. But once you go through the UWorld material, though, you're going to be exposed to this rule. And this rule basically says that if you are a U.S. taxpayer, but you're working abroad, you can exclude a substantial amount of your wages. Okay, it's indexed for inflation, but it's up over $130,000 now. You can exclude that from U.S. taxation if you're a bona fide resident of the foreign country, which it doesn't tell us that he is a bona fide resident, or you meet what's called a substantial presence test. And that's what you would have to remember, the substantial presence test. And that the substantial presence test requires you to qualify for that big exclusion, requires you to actually be in the foreign country outside the U.S. for 330 days during any 12-month period. Now you say, oh, wait, 330 days, because I see he did come home for a while in year 2, came home for a few weeks in year 3. We need to figure out where he is. Now, the consecutive 12 months is not a tax year. It's any 12-month time period. So you could start with October 2nd, go back 12 months. Start with November 1st, go back 12 months. But that's where the tax planning's coming here, okay? As a tax planner, you got to be aware, we need to make sure he meets this 330-day rule. Brittany was granted incentive stock options from her employer on June the 1st. And she exercised the options August 31st of year 3 when the trading price had reached $300 per share. Okay, so she was able to buy these at $150 per share, the exercise price. That's when she exercised 100 of those options. The stock is anticipated to increase to $350 for the end of the year per share. So should she sell it now in year 3 or wait till year 4? All right. Once again, if I'm dealing with stock options, that's the area I need to see if I can kind of find in my mind where I compartmentalize stock option rules. And with incentive stock option rules, get great tax benefits. All of her gain, all of her income can be long-term capital gain, but there's 2 holding period rules she has to meet. And one of those is that it has to be more than 2 years. When she sells the stock, more than 2 years from when she received the stock options, and then it has to be more than a year from when she exercised the stock option. So once again, you just got to get your pencil out and see where she is. And what's going to happen in this problem is that she needs to wait till year 4, okay, to be able to get to qualify for that the long-term capital gain treatment. Brittany's sister needed $30,000 by July 1st, year 3 to acquire assets to start her own business. Brittany is deciding whether to lend the funds this year to her sister at no interest or gift the $30,000. She's not sure when or if her sister can repay her. The current applicable federal rate is 3%. So this is testing to see, do you know the imputed interest rules, to know that if you loan money to someone else, you have to charge them a market interest rate, unless there's some exceptions that can apply, kind of de minimis type rules. But also she's trying to decide, should I just gift her the stock? So that brings into play that that if she gifts the stock, the sister has no income, but would Brittany potentially be subject to a gift tax? Their estimated itemized deductions for this year are provided in Exhibit 2. They're considering making a gift of a charitable piece of art. So that would be a long-term capital gain asset. And so from a planning perspective, you need to remember that if you give away long-term capital gain property as an individual, you get to deduct the full fair market value, the full $30,000 here. And the difference in the $30,000, and we were told they paid $10,000 for this 2 years ago. The difference, that $20,000 appreciation, it escapes taxation. So from a planning perspective, yes, giving away appreciated property is a very smart thing to do. They have the option of paying local property taxes of $1,000 for year 4 in year 3. Okay, so why would they want to accelerate that? Well, the only reason they might want to accelerate that is if they do qualify to deduct their state and local income taxes this year, because they've already met that. They're not above that $40,000 threshold. Remember, that threshold used to be $10,000. And are they itemizing this year? And then the last has to do with Brittany has some funds in her employer's flexible spending account, and so you have to remember the rules for flexible spending accounts, and that when you put money in those, there's tax benefits for that. And you can pay your medical expenses with before tax expense income, wages. In other words, you end up not paying any taxes on the wages that you're spending to pay your medical expenses through the FSA. But whatever you put in the FSA, you have to use in the current year. If you don't use it in the current year, you lose it. And we're told that she has, if you do the math on this, she put $3,050 in. She's used $2,500, right? So she's got $650 left to use for the year. And so once again, from a plan, should she go ahead and do her eyeglasses this year or next year? Well, this year, because she's going to lose that money if she doesn't go ahead and spend it. So I've gone ahead and gone through the law with you, but this is actually what the kind of the matrix looks like for this. Those are the 6 actions along the left-hand side, actually 7 actions. And then you have to indicate what the decision is and what the tax impact and savings would be. There's 2 exhibits here. What's the foreign earned income that was earned and when was it earned? That's letting you know whether or not, has John already earned more than the foreign income exclusion would allow him to exclude, which he hasn't yet. And then what are the itemized deductions that they already have before the charitable contribution of a long-term capital gain property and before paying the $1,000 of property taxes, to see whether or not they're itemizing, right? You got to compare that to the standard deduction. So for this one, I really already talked about, you know, this is just kind of saying, think through what the law is in those areas. And y'all think this one's a little tougher than the one Suzanne went over? Yeah, I think it is quite a bit tougher because you can see, once again, they're testing a little more complicated topics, and they're doing it more from a planning perspective. What Suzanne was really going over was compliance, right? You had to know the laws, what's deductible and what's not. But other than that, it was really more compliance related. So that gives you a little bit of sense of the difference in TCP and REG from a task-based simulation perspective. Before I turn this back to Jared, I just want to say one other thing is that, you know, the two most important pieces of advice I give students for studying and passing the exam is, number one is you got to have perseverance, right? You got to do, Suzanne said this earlier, you got to do a little bit every day, right? A little bit every day. When you study an hour and a half a day for 5 days in a row, you're going to learn 2 or 3 times as much as studying 6 or 7 or 8 hours on one day on Saturday, because your brain gets tired, right? And so try to do it in chunks. And the other thing is when you go take the exam, make sure you're not tired. Okay. You got to go in well rested. So Jared, I'm going to turn it back to you to close us out. I don't know if we have any questions or not that we need to answer.
There were a few questions, and so I think we could ask them. Actually, probably now wouldn't be a bad time to do it. They shouldn't take too long. So the first question is, does the question bank have a substantial amount of questions on these changes, right? With the OBBBA changes. Would you say there are more questions on the test bank based on the old material? Just because the material has been, obviously, it's the legacy material. It's been in there for a while. So that's the question.
Well, yeah, I think I can. First of all, yes, there is. There are questions in there on the new content. Got to remember, this tax law passed back July 4th of 2025. So it's been a little over a year, and it's just the CPA exam delays testing the material because they also have to have time to write the new questions write questions on the new law to get into the CPA exam. So there's been a lot of time to develop those questions. But in terms of how that breaks out to the content, even though it may look like what Suzanne and I went over tonight is a lot of new changes, these changes probably in REG impact no more than 15% of the material. And in TCP, it probably impacts no more than 7 or 8% of the material. So, you know, most of what you're going to be studying to pass these exams is content that was already there, simply because most of the content didn't change. But where it did change, yes, there's new questions.
Yep, awesome. I agree with that. We, you know, the tax team has been busy, well, since the beginning of the year, actually, before the beginning of the year, making sure that the information is all updated. I myself just finished updating the flashcards. So, yeah, but there's not when you asked, is it more material from the old law? Yes. I mean, there's, 85% of it is the old law and 50% on the new changes. So, yeah.
Awesome. I think probably one more question. Someone put their TCP exam is in 2 weeks. Are these changes really going to be tested even in 2 weeks? Do I need to know all of it to pass?
If you're testing in 2 weeks, the material is testable. How much of it would be tested? Once again, we don't. That's just kind of speculation on our part. I would say this though, if you're testing 2 weeks from now, it's probably better, and you haven't yet seen the, like in some other context, you haven't seen the changes that were put in by OB3. It's probably better you're taking TCP, because once again, there's not as much there that has in TCP that has changed compared to the stuff Suzanne went over for REG.
Yep.
But yes, it is testable. And what I would do is, that material is going to be released Wednesday. And so I would try to just, look at the things that Suzanne and I went over here. And if you're not familiar with those, try to focus on that in the revised content. Suzanne?
Yeah, no, I answered that one too, in a side chat question, and I pretty much said the same thing, is that it will be tested. You do need to know the general material, but like when you were going over the TCP changes, you're not going to see some complicated the new version, the CFC type of questions. It's just too detailed for you to get that. So I would still focus on the majority of the content that has stayed the same. If there's an area that we're still trying to figure out where exactly it's going to be tested, I would say the Trump accounts, whether you're going to see that in REG or TCP. No one has made that clear specifically where that's going to be addressed. So if you're taking TCP, at least review that Trump account information, because you might see it there.
Awesome. Well, I think that covers it. So a couple more slides. We have a task-based simulation mastery webinar series, August 20th and October 22nd. So, walking you step by step how to solve those task-based simulation problems with Dr. Megan Burke and Dr. Jean Yamamura. I had to make sure I say that right. So if you're interested in attending those, the QR code's there. Once again, you'll also get the recording emailed to you, and I'm sure you can find the link on our LinkedIn and all of those things too. And then thank you all for spending your Monday evening with us. We appreciate it. If you are interested in enrolling in the UWorld course, that QR code is there. If you are interested in having your university, or if you're at a firm and you're interested in partnering with us to be your review provider, or talk about integration or any of those type of things that we can do, please scan that QR code, or you can always email me directly if you see fit. My email's on there, my contact info. But thank you, Suzanne. Thank you, Greg. And thank you to everybody attended. And I hope you all have a great rest of your evening.
Yep, you're welcome. Thank you, everyone, for attending.